Do you know, gold is a safe haven for your portfolio in times of economic crisis? While paper-based investments and real estate are vulnerable to the effects of changing times, gold soars. A precious metals investment may save a portfolio when all else fails. The old Chinese curse, "May you live in interesting times," has particular relevance to the current epoch of U.S. history. There's a lot going on right now, much of it scary. Major investors around the world are responding to the events of our perilous age by sinking their dollars, Deutschmarks, and yen into gold, silver, and palladium. Bill Gates, Warren Buffett, and billionaire speculator George Soros, to name but a few. Big financial institutions, like the central banks of Russia and China, are also leaping onto the metals bandwagon, driving the price of these precious commodities ever higher. This is spurring a gold rush not witnessed since the misery index years of the 1970s. Many financial experts now view gold, in particular, as an island of stability in a paper-based investment market growing stormier all the time. A development that bodes well for everyday folks who want to shore up their retirement accounts with a precious metals hedge. People the world over are losing faith in politicians and currencies, says Mark Lebesque, CEO, World Financial, a highly successful investment firm specializing in precious metals based in Studio City, California. This has resulted in a flight to gold and other precious metals, a storehouse of value for more than 5,000 years. Investors are taking their money out of paper assets and putting it where it is likely to earn a better return in uncertain times. Gold reliables unreliable. Investments, once considered as stable as granite, are rapidly losing ground, Lebesque explains. Real estate is but one example. Long praised as a slam dunk by money gurus, home buying is no longer viewed as a hurdle-free path to profit. Stratospheric pricing and higher interest rates are putting intolerable pressure on the current housing bubble, factors bound to bust the suds sooner or later and drive the overheated real estate market into a deep freeze. The housing bubble will burst, rather than gradually deflate, following the rapid and violent pattern of decline of nearly every financial bubble throughout history. Lebesque says, higher interest rates negatively impact not only the health of the housing market, but other economic segments, as well. The stock market takes a hit, because higher rates make it more costly for companies to pay for the debt. Higher rates hurt corporate profit margins and reduce stock value, bad news given the deep debt situation so many companies are in today. Paper is passé, but gold. According to Lebesque, the US dollar has lost more than 80% of its original value since the early 70s. When we went to a floating currency, a situation is not helped very much by the debut of the euro in the late 1990s. Unlike American dollars, a portion of the euro is gold-backed, a stability feature that has helped it outperform the dollar over the long haul. It is for this reason that many foreign investors have been taking money out of US dollars and putting it into gold and oil instead. One explanation for why the price of both has continued to rise in Recent months. Gold prices are climbing right now, because the Federal Reserve is printing dollars in flood proportions, to keep the real estate market afloat, adds Richard Russell, editor Dow Theory Letters, a stock market trends and securities report published since 1946. This is creating inflation, which erodes purchasing power. All the world's central banks are inflating right now, reducing confidence in paper globally, and encouraging gold buying. India and China are spurring gold prices as well. India is the world's largest gold consumer, and the Chinese government is actively encouraging its citizens to buy gold. When gold peaked out in the 1970s, interest rates were at an all-time high, Lubezka says. Right now we're waiting to feel the effects of the last 9 interest rate increases, which generally take 6 to 9 months to begin impacting the economy. Now's the time to buy gold, because when rates go up, downward pressure is exerted on real estate, stocks, and bonds, and commodities like gold tend to increase. The opposite occurs when rates travel from a high to a low. That's the time to reduce gold assets, and increase the paper part of a portfolio. Buy gold without getting burned. Michelle Henderson, a talent agency owner in Los Angeles, California, understands the stakes when it comes to investing. As an agent, I work in a commission-based world, and have to invest in both people and ideas all the time, she says. Though I'd had bad experiences with stock investments in the past, I knew I would eventually find something that would work for me. I invested in a diversified metals portfolio, made up of palladium, silver, and gold, and earned a profit of 38% with the palladium alone. Staying focused on making money, and following World Financial's advice, I was able to earn an above-average return, and greatly increase the overall value of my assets safely. Lubezka explains, it's probably best for the first-time investor to begin conservatively by purchasing physical metals instead of gold stocks, which can be very volatile. According to Clearwater, FLA-based talk show host and gold analyst Tom O'Brien, when metals gain 20%, gold equities jump by 50 or 60%. That's great when it happens, but the reverse can occur as well. Buy gold bars or coins, and put them in a safety deposit box. If you chose to purchase coins from a coin shop, make certain you pay the lowest price possible, and that they have a buyback policy. If you elect to go with a broker, fees will be inevitable, because you are purchasing a tangible commodity. There are brokers, and then there are brokers. The best of the breed will answer all questions, and make the process of first-time gold buying less nerve-wracking. Great brokers are also accessible when needed, and quick to call with any new information that affects the value of the investment. Work with established companies. 5 years in business is good, 10 even better. Don't bother with firms that badger you with telemarketing offers, or apply high-pressure sales tactics. Avoid paying high commissions too. Some brokers have layers of fees, through which they earn more money than they do invest on behalf of customers. There are also companies out there that will not buy metal back. Stay away from them as well. At Regal Assets, we believe in providing you with trusted and proven precious metal investment options. We take pride in the way we do business and have enjoyed helping our clients grow their portfolios for over a decade now. Our expert team members work side by side with you every step of the way, so you can be sure that your wealth is safe and in a position to grow. See for yourself what we offer with our free Investors Kit. It explains Regal's IRS-approved investment options and how they work. We will help you choose the right strategy to achieve your goals. Read more about Regal Assets. Follow the link in description area.